Have you ever felt like your money is shrinking? One day a coffee costs $3 and the next it's $3.50. That feeling isn't in your head. It's called inflation. But what if I told you that the story of inflation is no longer just about printing money? It's now deeply tangled with the technology in your pocket and the algorithms that run our world. Stick around because we're about to decode the new rules of money. Inflation, in simple terms, is when prices rise and your money buys less. A little bit is actually good for the economy, encourages people to spend and invest. But when it gets out of control, it's like a fire that burns through your savings. In finance, we see this as a delicate balancing act. But where does this imbalance come from? At its heart, inflation is about too much money chasing too few goods. When a central bank pumps more cash into the system than the economy can handle, demand skyrockets and prices follow. Think of it like a concert. If the venue has 10,000 seats but the promoter sells 20,000 tickets, the price for those seats is going to soar. This is the classic story. But now there's a new character in our story: technology. Technology is a double-edged sword. On one hand, automation and AI can make things cheaper to produce, which should push prices down. But on the other hand, things like lightning-fast e-commerce and targeted digital ads can make us want to buy more and faster, pushing prices up even crazier. Algorithms are now setting prices in real time. That price you see online. It might change in the next 5 minutes based on 1 million data points. So how do we fight this new digital inflation? Central banks use their old playbook, raising interest rates to make borrowing more expensive and cool down spending. But today, they're armed with new age tools. They use AI-driven forecasts and real-time data to make smarter, faster decisions. Yet, at the same time, the rise of cryptocurrencies and decentralized finance, or DeFi, is creating a new financial world that operates outside their control. For investors, rising inflation changes everything. Traditional safe havens like bonds lose their appeal because their fixed returns get eaten away. Instead, people flock to assets like real estate, stocks, or commodities to protect their wealth. And thanks to trading apps and robo-advisors, these shifts happen in the blink of an eye. A whisper of inflation news can trigger a digital stampede in the markets, all happening in seconds. This brings us to cryptocurrency. Bitcoin, with its fixed supply of 21 million coins, was created as a direct challenge to the endless money printing that causes inflation. But its wild price swings make it a risky bet for many. Now we're seeing experiments with stablecoins and even central bank digital currencies, or CBDCs, as a way to blend the stability of traditional money with the innovation of crypto. The debate is far from over. How we even measure inflation is changing. The classic Consumer Price Index, or CPI, struggles to keep up with our digital lives. How do you price a Netflix subscription or a free app that sells your data? Fintech companies are now using big data, analyzing billions of transactions to get a real-time picture of inflation, often spotting trends long before official reports come out. Finally, think about psychology. Inflation isn't just about math. It's about what we believe will happen in the digital age. Our expectations are shaped by social media trends and algorithmic news feeds. This creates powerful feedback loops. If everyone starts panicking online about rising prices, that fear can actually cause prices to rise. It's a world where human emotion and machine learning feed off each other. So, is technology the villain or the hero in this story? The truth is, it's both. It gives us tools for incredible economic precision, but also introduces risks we've never seen before. The future of your money and our economy will be written at the intersection of finance and technology. Inflation is no longer just an economic indicator. It's the digital pulse of our modern world. Thank you so much for watching and exploring this complex topic with me. If you found this video insightful, please hit that like button, subscribe to the channel, and ring the bell so you don't miss our next deep dive. Stay curious, and I'll see you in the next video.